I'm pleased that we have delivered a first half performance in line with expectations, and we are on track to deliver our full year guidance. As we transform our business and build a smokeless world, we have been working hard to encourage adult smokers who would otherwise continue to smoke to make the switch to our smokeless products. Smokeless now accounts for 18% of group revenue, up 1.4 percentage points versus full year 2023, and represents more than 30% of total revenue in 25 markets. Let's take a look at how our regions have performed over the last 6 months. In the US, H1 revenue was down 6.7% due to the lower volumes mainly driven by macroeconomics headwinds and the continued lack of enforcement against illicit vapor products. We expect an acceleration in our US performance in the second half, driven by previously planned investments we have made in our commercial plans, new category launches, together with the unwind of inventory movements. Excluding these inventory movements, our first half US revenue was down 4.8%. EME is a true multi-category region, driving continuous strong H1 delivery, with revenue up 5.4%, driven by growth in every category, and we expect this positive momentum to continue in the second half. APMEA also delivered a resilient performance in H1, with revenue up 1.8% as we lapped a tougher prior year comparator. We expect a stronger performance in H2, driven by continued resilience in combustibles and an acceleration of new category growth. Through our quality growth lens, focus on balancing top and bottom line delivery, new category revenue was up by 7.4% and new category contribution up by £165 million. Looking forward, we expect new category revenue growth to accelerate in all regions, driven by the phasing of the new product launches in all 3 categories. And we are encouraged by the early positive consumer response to our latest innovations, including Glow Hyper Pro with its upgraded consumables. In May, we launched Vuse Go 2.0, our new vapor innovation across 12 markets. An upgraded device with superior heating technology, removable battery and device lock. And we launched Vuse Go Reload, which boasts a rechargeable mode format, device lock and upgraded consumables. These innovations directly address key sustainability and safety concerns. In Modern Oral, Velo delivers strong volume-led revenue growth across every region. In AME, Velo maintained its leadership position with 65% share, growing revenue at 47% and capturing 75% of industry growth. I am excited about our future opportunity in Modern Oral, with new markets outside the Nordics already representing 40% of regional growth and highly profitable. In the US, we launched Grizzly Modern Oral last month to capitalize on the trend of traditional oral consumers trialing Modern Oral. We are also encouraged by the progress of the refreshed Velo brand expression, with continuing inroads in the US national market share. Our focus on quality growth is driving strong returns on more target investments, and I'm confident that these will deliver long-term growth and value creation moving forward. We continue to call for more appropriate regulation and enforcement of new categories to tackle illicit products, particularly in the US vapor market. However, we are clear that more enforcement action is still needed at both state and federal levels. Last week, we welcomed FDA's decision to award marketing authorization for our Vuse Alto device and tobacco flavor consumables, demonstrating that these products are appropriate for the protection of public health. BAT is a highly cash-generative business, and we are committed to continue to reward shareholders with strong cash returns. We have made good progress in enhancing our capital effectiveness, including the partial sale of our ITC stake, which enabled the initiation of a sustainable share buyback, and we continue to deleverage our balance sheet and expect to be within our narrowed target range of 2 to 2.5 times adjusted net debt, adjusted EBITDA by the end of 2024. Working together with our new CFO, Soraya Benchik, we will ensure we create the right balance between growth and cash returns. In summary, we are on track to deliver our full-year guidance. Guided by our multi-category strategy, I am confident that we will progressively improve our performance to deliver 3 to 5% revenue growth and mid-single-digit adjusted profit from operations growth by 2026 on an organic, constant currency basis. Thank you.